Hi, this is Joseph, and in this video we're going to review consolidation, and I'd like to share with you a few tips that I use every day to identify the correct ranges of consolidation. Now, before we go further, I want to let you know that if you use this technique or this strategy, you have to be really careful with it. You need to practice with it first of all, because if you identify the wrong ranges of consolidation, they could potentially lead to false moves or breakouts of consolidation. I often refer to the consolidation range that I use to identify breakout trades as the overnight consolidation range. And what I mean by that is the quiet time, or when a particular market that's related to that currency is closed. So if we look here at the euro dollar 1 hour chart, here you see a clear range of consolidation. Here is a high and here is a low. This is my consolidation. So here is a spike low that's a confirmed low. It's got two candles to the left, two candles to the right that are higher, so it prints that solid spike low, something that I can identify as confirmation here for this spike low, and then a spike high. We've got two candles to the left, two candles to the right that are lower than this high, and for the most part nothing really goes any higher than that, so that's pretty easy to see. This one was just a clean move off of that bounce and straight back up. Now these are 1 hour candles, so it took a little while, but you can see that for the most part, relative to this time frame, this is one clean move up. So that's easy to identify. That's my consolidation range. Now another tip I'd like to share with you is that, again, if this range is too small, I might need to make adjustments to it. And what do I mean by too small? Well, to me, a range that's too small is about 20 pips, 30 pips, 40 pips, maybe even 50 pips from the high to the low of that consolidation range. If that range is really small, like 30, 40 pips, I know that I'm probably going to have to make adjustments to that, because if a candle closes outside of that range, it could potentially lead to a false move. What I'm doing is looking for an opportunity to trade inside of this range. So I'm going to either get a breakout candle, which is my continuation breakout trade, or an HL30 trade, which is a reversal off of support and resistance, or the T2 pattern, which is a major bounce off of resistance or support. That range is what's really important, the overnight consolidation range. If it's too tight, it will probably lead to a head fake, meaning that a candle might close outside of that range, even if indicators confirming, but it might pull right back inside of consolidation if that range is too tight. So this high here is 1.2144, and that low there is 1.2066. So I'm comfortable with that range. That's about 75-80 pips. I'm okay with that. That's about the average consolidation range. So all I need now is to identify that high, and then I'm going to put another support level down here, and then I set up my alarms so that if a candle either touches or moves through this support or resistance level, or if a candle closes outside of this consolidation range, I get an alert, and then I come and I verify on that signal candle if there's indicator confirmation. So that's one of the ways that I use overnight consolidation ranges. Now let me show you another pair that really wasn't that easy to see. Now we're looking at the pound dollar, and the pound dollar had an overnight consolidation range. You can see this spike low here at 1.5484, and then that spike high here at 1.5534. That really isn't that big a range for this pair. So at one point I had an overnight consolidation range that looked something like this. This is what I had. I had my overnight consolidation range here, and then I had my overnight consolidation range there. Again, this range is too tight. It needs to be about at least 60 pips, but preferably 70 or 80 pips for that overnight consolidation range. So here you'll notice that even though I knew that this range was too tight, I knew eventually I was going to make an adjustment to this resistance level. It was just too tight. So here we have a candle that closes above that resistance level here, and for the most part there was indicator confirmation, which could potentially signal a move to the upside. But it isn't a valid consolidation range. Even though the indicators are lining up correctly, it still might fail. So if we take this out a few more candles, you'll see how price rolls over, and here it is currently going back down towards support, because that range was just too tight. This is one of those locations where it might lead to that head fake. It might print a signal candle above the resistance level, but it might fail and come right back inside of consolidation. The reason is the overnight consolidation range is just too tight. So now at this point, I've made my adjustment to this resistance level, and now I keep my support level, since there hasn't really been any change to that support level yet. So I hope this helps you. Please give that a try. Remember, I'm using this breakout trade on the 1 hour time frame, and I'm trying to identify that overnight consolidation range on the 1 hour time frame as well.